Hello. I thought I'd try and make a video explaining how I trade and how I see the market after 20 years of learning to read the market and understand how it moves and trying to simplify the entire process. I haven't written a script or anything. I'm just going to try and spitball this and see what happens. So we'll see how we go. Just spent 2 seconds just thinking about the key things. Reading momentum, reading support and resistance, and how to actually place trades using this knowledge. That's basically the guts of it right there. Reading momentum and support and resistance. So I'm going to do squiggles like this, and that's supposed to represent market movement. If we actually open the charts like this, the way I would draw this as a squiggle, like let's just take a screenshot, and I would represent all of this price action simply by going, price was down here, moved up, and then I would say it basically just wiggled here, up, down. So if I draw a squiggle like this on in my design software, this is kind of what I'm meaning. So it might not look exactly like that in the charts, but yeah, this sort of thing. So if we hid the candles, you'd just be left with this like squiggly line. That squiggly line is basically what I'm drawing over here. So yeah, this would be lots of candles moving around, but the general pushes would look like this. So, and I can kind of view the market like that. When I see the charts, I'm basically seeing it like this. I'm going, okay, it pushed. Actually, I would normally just delete that. Normally include the pushes from the very bottom to the very top. So, for example, I would start here and I would say it went all the way up to this point. So I always include wicks in my when I'm thinking about how far something went. I don't just include the bodies, I include the wicks. So this is how I would really see the market. That's pretty much just one push up to there, then down to that point, and then up to here. So yeah, that's how I see the market. Some people say they disregard wicks and things, but to me that is absolutely valid price action. So yeah, that's what I'm doing when I'm scribbling on here. Cool. So yeah, let's just say the price pushed down, came up, down, to this low point here and started wiggling sideways and then pushed up. So we can read the momentum of this push simply by measuring the high of the push down to the lowest point of the push. And then we can measure the momentum of the counter trend push, so like the small retracement, before the trend started pushing down again, and we can check the momentum of that. So it's just all about how aggressive was the push, meaning did it come straight down or was it pretty sideways? So it was struggling to push. And that is obviously much weaker than that. So it's not just how far did the push go, it's also how long did it take to get there. And that is really easy to see. And if you understand the importance of it, it's really easy to use as good information. So for example, this push here, if we take that, make it yellow so we can see it, then compare it against this one, we can see that this next push here, from here down to here, took longer to get there. It's less aggressive, so it's moved slower because here's the amount of time it took from here to here is time, and from top to bottom is how far it's moved in terms of price action. So the yellow one went further quicker, and the green one went not as far and taking more time. So that's really great information to have, and it's right in front of us. There's people download lots of indicators and things which are just mathematical formulas that are trying to tell you if the momentum is gaining or slowing down and things, and it looks very impressive using all the squiggly line and stuff. However, it's right in front of us and it's not hard to read. I think reading it like this is much easier than any momentum indicator I've ever seen. And it's relevant to every push. So you can simply see the push. Yeah, I think this is the way to go. You don't need indicators because the price is telling you everything you need and it's very easy to read. So, cool. So yeah, we can see that that push there was bigger than the following one and much bigger than the next one. So yeah, obviously it's shrinking down a lot there. So here we can say the price is losing momentum and it made it down to a low point of here. And then the next part, the next time the price came up and then down, it didn't even come as far back, like as low as the previous low. So that's really telling me that the sellers are really struggling to push down. And the market can only go up or down. It can go sideways, but most of the time, it's only going sideways as a transition into the next team taking control. So if you think of the sellers as a team and the buyers as a team, the buyers don't want to start placing buy orders if the sellers are showing signs of strength. So like in this example, the sellers were pushing the price down, and then there was a lot of time that passed letting the buyers know that the sellers don't care anymore. They're not aggressive anymore. They're stepping aside and they're totally out of steam and very likely just to let the buyers take control now because they've got no steam left in them. So that's what this is telling me. That's what the sideways movement is telling me, that the sellers are all tuck it out. They, yeah, so the buyers are free to run with it if they'd like to. So, yeah, so that's what this is telling me. And then once we get a higher low, then this point here, if the price comes back up to touch that point, it's very likely that the price will move higher before it moves lower. So if we get a higher low, if first we want to see signs that the momentum is slowing down. So we're getting weaker pushes and then the price coming up. And then if we have our stop loss down here, what we're saying is we think that the sellers are struggling, the buyers are likely to step in, and just to be safe, we'll exit the trade if the sellers pick up momentum. Because if they go from this sort of push, which is just a pretty chill sort of a downward push, which is that leg there, it's unlikely that if the price comes back to the same point that they're going to get more aggressive. They're probably not going to now decide, okay, let's start going again and push it down a long way. That's less likely to happen. So yeah, so basically that's how I read momentum. The price is coming down, and then we start getting higher lows, which is showing us the sellers are struggling, and we're likely to start turning around and moving up. And then same with a buy trade, an uptrend. So if the price is moving up, and then we start getting this, and then it starts going sideways, and then starts dropping. That's, I didn't do that end part very well, but yeah, it starts quickly and then starts dropping. So yeah, exact same thing. We can see that there were strong up pushes, and then the pushes got smaller and took longer to get there. So yeah, that is it. That's how to read momentum. It's very, very, very simple. And then just almost if you kind of squint your eyes so you're not really looking at these zigzags, if you were just to draw this without any zigzags, it would just come up and over and down. That's basically what we've got. And to me, that looks quite a lot like a horseshoe, like that. It's just, yeah. So I just call this a horseshoe pattern. So yeah, price is coming up and it's slowly rolling over and dropping. Fantastic. That's great. The other thing about adding time into the mix is it's allowing the sellers, or in this case, the buyers, to gain momentum if there's any steam left in the tank, if there's any gas left in the tank. But if we give them a lot of time to really show us, like, no, they're not keen, then that shows me there's a way higher chance that we're going to start seeing some dropping. And in so many cases, that's exactly what we get. So yeah, so that's momentum. It's not as, there's no magic formula to it. It's just, yeah, seeing if it looks like it's gaining momentum or struggling in the current push. So that's momentum. Support and resistance is looking at the exact same thing. So let's just say we've got that pattern, which might happen in the middle of a trend. We've got a strong push, a bit of a pullback, and another strong push. What is quite likely to happen is the price just comes down a little bit and then carries on up. But what happens a lot, especially at the start and end of a trend, is you get the price doing this. Price comes up, down, up, and then this point here is really, really significant. Because what happens very, very often is that at the start of a trend and at the end of a trend normally, the price will come back to that point and then bounce off it. So my sister actually coined the name a tick trade, because from here down to here and then up to here, it draws a tick. So if we just pull that off to one side, we can see that that is a tick. So from this point down and then up, we've got a tick. And from the start of the tick, which is here, if we draw a line straight across, that is our support and resistance line. So the start of the tick and the high point of the tick shows us that the price is very likely to drop down to that support and resistance line and then bounce off again. That happens a lot. So you can see that this is what we've got over here. The price, we've got our tick, then the price comes back to that point and bounces off it. So so we call that a tick trade. Well, I call that a tick trade along with my sister. And they happen a lot. So that is basically the support and resistance I'm looking for. If a tick trade, if the price has come down and bounced off this point, moved up, and then comes back to that point, I'm a lot less interested in it, because it's already bounced off that point. And then when it comes back, normally all the orders have already been filled there. So you might get another bit of a bounce because people see it bounce there before, so it's probably going to bounce again. But it's usually a lot less strong than the previous one. So if the price comes up again, it's normally weaker, and then it comes back down. And now, if we read this as momentum instead of a tick trade, we see that the price was pushing up strong, and then the next push was weaker than the previous one, and then the next push was weaker again. And now we've also got a high followed by a lower high. And that to me is absolute gold. The first time you see that, along with this kind of loss of momentum, that to me is screaming, I'm about to drop, that the market is about to drop. So actually, in this if the market had done exactly this, I would be placing a sell trade right at this point here. That's where I'd be putting my sell order in. And my stop loss, I've got two methods for this. This is my safe stop loss area, and this is my aggressive stop loss area. So if it's a really perfect trade setup that's all signs are screaming it's about to drop, I don't mind being a bit more aggressive. But if it's a little bit more of a weaker signal, like it's not quite as perfect, then I might just have a safer stop loss. And the reason I do that, the reason I wouldn't just leave it as one or the other, is if it's a really great trade setup, I want to maximize my profit from the trade. So so sometimes I'll bring my stop loss in a little bit more, but yeah, or I might just play it a bit safer. But yeah, because that's just screaming I'm going down. Great. So that's how I read support and resistance, and there's no more to it in terms of yes, this is a support and resistance line because that's where the price bounced, and so's this, and so's this. Every turning point could potentially be a support and resistance line, but I always think it only needs to bounce off that point once to basically make it less of a big deal. The first time it hits a support and resistance line usually is its biggest impact. Subsequent bounces tend to be a lot weaker. Occasionally, which is very, very seldom, you'll see trades or see market movement that does this, where like the price comes down, then up, back to the same point, and then bounces higher, then comes back to that same point and bounces higher again until it explodes off. So that is a really valid support and resistance line there, and we're seeing that the buyers are just getting stronger and stronger and stronger. So yeah, that does happen, but it's a lot less common. But if you start seeing it getting stronger there, don't assume that the price is going to be pushing through it, because it's showing that the buyers are getting stronger there. So there's that. So basically tick trades are my support and resistance. I'm not looking for much more than that. And then how do you profit from that? So I've touched on that with little bits of how I would trade certain things. So let's just have another think about, let's say the prices come up and then down like so, comes back down to this tick trade entry point about there. So what you can do, let's just say this is the, let's just call it the 4-hour chart. So 4HR, turn that white so we can see it. So let's just say we saw that on the 4-hour. Then we can zoom in to say the 15-minute or something like that. So let's say we've got the 15-minute on another window we can see. And then we see the price trending down hard because of this point here has been pushing down hard, and now it's got to a point where we're expecting it to turn. So let's just say we've on the 15-minute we've seen this push down, comes up, and then starts showing signs of weakness. The pushing starts to turn around. That to me is an incredibly strong signal, because we're seeing the down push, which is again this part of the 4-hour, and we just zoomed in on it. We're seeing the downtrend struggling at a point that we're expecting a turn. So the underlying trend, the big picture trend on the 4-hour is up. The price is pushing up, then we've got a retracement, and then the price is pushing up again. So it's definitely an uptrend. We haven't been getting lower highs. It's not showing any signs of weakness. So that is absolutely a valid uptrend. And now on the small time frame, we're seeing this down push weaken at a point we're expecting it to be bouncing. So as soon as we get the price coming up to this point here, from here across, we can see that like in this little squiggle, the price was losing momentum and then it made a higher low. So what I would be doing is entering when it comes back up to touch this, this yellow line, which is the previous high, after showing that the buyers are getting equally as aggressive as the sellers. And now we could either expect a small bounce off and then the price to go up, or the price just to go straight up. That's basically the two options. It could go up, bounce off this, and then go back up as a tick trade to the upside. And then on the 4-hour, we would likely see the price be zooming off again. So yeah, that is that's how I would be trading it. So it's the exact same type of analysis on both time frames. Just because we're zooming in, we don't need to change the way we're looking at the market. It's still just looking for momentum and trading the support and resistance. That's it. It's just that over and over and over again on all time frames. Very, very simple system. So yeah, we've got a loss of momentum at an area where we're seeing a tick trade. So that's it. We're in. That's basically all of my trading. It's just that. If we jump into the charts, we'll have a look to see what we can see. If we, actually, I'll just reattach this so I can see what's happening. Reattach chart. Here we go. So Euro daily. I'll just move that there. This can be the 4-hour and this can be the 15-minute. So this is all the Euro chart. So on the weekly, we can see that the price started up here, came down, up. Oh, it did a bit more of a wiggle there. Down, up, then came down to that same low here. And now the price pushed up And so this push is smaller than the previous push. So it's showing it's struggling. And then the price comes down to that same point. So that would actually be a really nice area to be placing a sell trade with a bit more information. But basically that's the kind of setup we're looking for. And then your stop loss, if it was a great setup like this, your stop loss might be up here. Then the price moving down, hopefully at this point the price just drops, and if it keeps pushing down, then back up to this point, then hopefully you'd expect to bounce off again. However, that's not what we got, because trading is not, it doesn't always work. So in this case, the price just came down a little bit and then started turning around and then broke this support line here. So like where we'd be expecting a tick trade bounce, we didn't get that. So I would actually be looking at exiting this trade pretty quickly because it didn't just explode down. So yeah, that's the type of, the way I'd analyze that. Now the price has come down, up, still making lower highs, but now it's making a low higher than the previous low. So this is all, to me, I would just literally just call it mess. And if as soon as you don't understand the pattern, just think of it as mess, and you want to stay out of it until you understand it again. Because what's likely to happen is it's actually just a movement on a bigger time frame, like a monthly, and now you can see that the price just pushed up, came down, pushed up. Oh, just move that back. Price pushed up, rolled over down to this point, and then made a lower high, and is now wiggling. So I would actually say that the price was pushing down, came up to this point, down, made a lower high, and now it's doing this little squiggle. If it comes back down to this point here, I would say it's extremely likely from that point to drop, because it's really just a big turnover. So yeah, if it's confusing on a smaller time frame, jump to a bigger time frame to see if it is a bit clearer. Cool. So yeah, we've got that. The daily, here the daily price was moving up. It came up, down, up. And actually here was a really nice tick trade. So here was our support line. The price came down, hit that point, and then bounced off it all the way up to here. So that was a tick trade that worked absolutely fantastically. Just clean that up a bit. So yeah, price came up, down, up, down, up, and then started going sideways, and then made this little zigzag here and dropped down. That little zigzag was a lot more powerful than it might look. At first glance, there's just a couple of candles going down, a candle going up and a candle going down. It doesn't look like a great deal of information or anything that exciting. To me, that is screaming a very nice trading opportunity, because this is the point where the price is really struggling to go through. So it's showing us that it bounced off hard there. It hit that same point. It bounced off even harder the next time. Then the price came up to here and gave us a lower high. So at an area where we would expect it to bounce because it's telling us it is bouncing, we're also getting the price going down, up, down. So the entry would be at this low here, and our stop loss just up here, and the price plummets. So yeah, that's just reading momentum. So we've got a sell entry, which is the, if you're looking for a time to enter a trade, if it's a sell trade you're looking for, it's a lower high. The first lower high you see is usually the first point that you're allowed to get in. Like it's kind of the market's way of saying, here is a safe point to get into this trade. So that's how I'm seeing that, and obviously the result is fantastic. And you can also see the price coming down, up, down. The price came all the way back up to that exact point to bounce off it. So that was actually a tick trade entry. If you didn't get into it in the first point, it was a tick trade entry there. So that is a tick trade sell. And obviously it worked extremely well. So then the price comes down. Now if we look at how the momentum is acting. So we've got that push there, followed by that push there, followed by that push there. And then lastly, we've got that push there. Now, if we put all those side by side, this was the first push. I'll put it down here. That was the length of the first push. This was the length of the second push. Identical. Or, yeah, when I think of, if something is really close, I don't go in and measure with a fine instrument to say, is this 1 pip higher or lower? It's either very obvious or it's basically just the same. Like this push here is extremely smaller. Like it's it's half the size of this one, so it's clearly smaller. And that's the sort of level I'm looking for. Something needs to be obvious. So this is obviously smaller, fantastic. This one here, it's not super smaller, but it's definitely smaller. It's not, it's definitely shorter than the previous one. So we can say that there was great momentum for the first two pushes, and then it really started struggling. So if now we've got the momentum is shrinking, and we've got a strong support line. The price never broke below this. Every time it touched it, it bounced off it. So we've got a strong support line and a massive loss of momentum. So that to me is saying this downtrend is really struggling and it's likely to turn. Definitely worth thinking about entering a trade on as soon as it gives us a higher low. So once the price came up to here, then down, then up, that was our higher low. So this, this point here is higher than the previous one. So this is a low because the price came down and then up, so it's the low point, and it's higher than the previous one. So we've got higher low. So that's the price moving up. Now, this is on the daily. If we look at that on the 4 hour, it's actually way cleaner, and we actually get a higher low happening even earlier, which is really nice. So if we just zoom out a bit, we can see that this push here, from here down to here, up to here, down, that is all of the stuff that I was just pointing out over here. This top point here is this point here. We just zoomed in a bit so we can see it a bit clearer. Cool. So that's the advantage of the 4 hour. We actually see it with a bit more clarity. So we can see the price came up to here, then down to this point, then up to here, then down, and then up. So that was a higher low after we've got all of this information on the daily. We've got a loss of momentum. We've got a really strong support line that the price just can't seem to break through. And then after all of that happening, at the very end, we've got a higher low on the 4 hour. So that to me is a really nice entry point. And the price, this was actually on Friday night, and Monday the price opened here. So it actually gapped over our entry. But then the price came up to this point and down, which is, if we just clean that up a little bit, we've got the price going here, here, here. So this point from here down to here and then up, if we change the color of just that, actually if we just move it off, that is our tick. So that's our tick trade. I'm just going to make that blue. Cool, so we've got our tick trade. Now we know the start of the tick trade is the price we expect, the point we expect the price to come back to and bounce off. And that's exactly what happened. The price comes down and then up, and that's what happened down here. The price from that point there, price came down, hit it, bounced off. It actually bounced off it kind of weakly and then came back down and then bounced off properly, which is very common. So this is a double bottom. It's miles nicer if you get a higher low there. So let's say the price came down and then made a higher low. That would be an absolutely perfect place to be getting into a trade. But it gave us a lower low. Less nice, but still not terrible. So between the 2 points, there and there, we just find the highest point between there, which is this point here. And that, when the price comes up and hits that, that is actually the entry for this trade, and your stop loss just down there, just below the low. And that, as a big drawing, gives us our tick trade across here. And we'll just change that blue. And I'll just get rid of this little thing just to make everything clean. So yeah, we've got the price going up, down, up. Got our tick, price comes back to this point, and then kind of as a more zoomed in look, we can see that it's given us a double, not really a double bottom, this is definitely a lower high. And then the price coming back up. So the buyers are definitely starting to jump in at this point. And we've got our buy trade here, which is the high point between these two. So it's come up, hit that, and zoomed up. And actually, if you're looking closely, you can see the price went above it and then come back down to this point and bounced off. So on the smaller time frame, it actually gave us another tick trade. So if we zoom out, which was actually this movement here, is this movement down here. So we can see that the price got from this point down, started struggling, got to this point, then wiggled up, then made a lower low. So from there to here, this is lower than this. And then the price came back up and came above here. Let me just zoom out a little bit. So this was the high point that I was talking about over here. If we draw that out, we can see that once the price got above it, which was here, then down, came up, struggled, and then went above it, came back and hit it and bounced off it. That was this tiny little movement here, really zoomed in. Actually, if we zoom out to say like the 30-minute, might be a bit cleaner. Yeah, it's much cleaner. Yeah, so yeah, price down, up, down. This is the high point between these two. And so that's a good support and resistance line. And as you can see, the price struggled to get through it. And when it did, it bounced off it and then zoomed up. That was the start of the trend that ended up going for miles. Yeah, so that's all just using that same information. It's the tick trade. It's reading momentum. And it's looking at multiple time frames that are all agreeing with each other. So we started by looking at the daily. We can disregard the weekly. That was just a big mess. The daily was giving us a way cleaner setup. This loss of momentum, a strong support line where the price was just struggling to get through. Then we got a higher low on the 4 hour. And then we also got a tick trade on the 4 hour. And if we zoom into the 15-minute, it gave us a really nice entry on a tick trade there. So there's lots of opportunities to enter. And the more zoomed in you get, the better risk to reward you get. Because we knew that the daily was very likely to start pushing up. So even if you got, say, 2 days worth of up push, that can be thousands of pips. And if you're entering a trade on, say, like a 30-minute chart or a 15-minute chart or a 5-minute chart, the stop loss might only be 50 pips or something. Like, it could be quite a small risk to reward. For example, so the price came down, up, down, like I mentioned before. Then, so I'll just put that as a line there. So here was the high point. If the price comes up above that, which it did, it got to here, then came down to bounce off the back of it. So at that point, you could wait for the price to break above that zone and have your stop loss just below there, because that's the lowest point that the price made. So that is your risk. It's your total risk on the trade from there down to there, which is 21.2 pips. And then the price actually went up 88.5 is a total. So yeah, that was the high point there, 88.5. So what did we say? 20. Actually, yeah, your stop loss down here somewhere, 23 to 88. I'm getting worse and worse with doing maths in my head. I don't know why, but so if we do 88 divided by 23, so that was an almost 4-to-1 return, 3.82 return on risk, that push up. Yeah, so it's, and I would say that the push definitely isn't over. If we look at the daily, there's no sign of slowing down yet. And it's also not at a point where you'd expect it to slow down. I would probably be expecting it at up here. It bounced off that, so we'll probably get some slowdown and maybe bounce off there. It may happen sooner, but that would be a fair place to kind of start seeing it slow down and reverse. So yeah, it's still an active uptrend, and we've already had a total profit of 3.82 or whatever it was on this trade. So yeah, very simple analysis. It's the same thing I'm looking for on all time frames, just reading momentum and support and resistance, which is basically just a tick trade. Occasionally, like on the daily, you can see the price bouncing off the same point over and over again. And this isn't a tick trade until the price breaks down below it and then hits the other side and then bounces off that. That would be a tick trade. But the fact that the price can't break below it tells me that that support is pretty strong and the momentum is getting weaker and weaker. So yeah, very simple analysis. At least I'm hoping it's very simple. I've been looking at the markets for about 20 years, and to me it seems very simple. So yeah, I'm hoping it's coming across like that. I have covered a lot in this video, but that's basically everything in terms of what I'm looking for. That's it. Reading momentum. Actually, what have I got over here? Yeah, reading the momentum, reading the support and resistance, which is just based off the movement within the momentum. So the momentum is the big picture stuff. It's like it's got lots of support and resistance kind of built into it, and then it's measuring the aggressiveness of bits and pieces. So yeah, momentum, then your support and resistance, kind of picking the momentum apart a bit, and then placing trades based on what you see. And yeah, so the other thing is, even if you only got like 50% of your trades right, if you can hold onto your position to make even 3 to 1 or even 2 to 1 on your trades, then if you get 50% of them right, you're still making good money, because let's say you take 2 steps forward, 1 step back, 2 steps forward, 1 step back. You make $2, you lose $1 because you have a losing trade. Then you make another 2 to 1 return, so you make another $2. You have a losing trade, take 1 step back. So your account should always be increasing, even if you've only got a success rate of 50% with this. And these trades are so consistent. I would my success rate over the last few weeks. This is a new account, so I've just started trading a what's it called, I've forgotten the name. Prop firm. Just started doing prop firm trading, and before that I've only ever traded personal accounts, and just doing prop firms for the first time. But my success rate over the last 2 weeks since starting with the prop firm is a 75% success rate, and I have also I've taken a couple of like not great setups. They were a bit too aggressive. When I'm reading the market calmly, it has an even better success rate than that. So but even if the success rate is not as good, because the risk to reward is so good on these types of trades, like if we're getting into a movement that should be moving a long way, so your risk to reward should be fantastic. There's also other times you can take trades, like on the 4 hour, when we saw the market slowing down and starting to go sideways, there's actually some really nice trades within this price action too. So like on the daily, we saw the price, it was still definitely a downtrend until we got the higher low on the 4 hour. Technically, we should still only be looking for sell trades, because we don't know if the buyers are going to be able to hold off the sellers until the sellers totally give up by giving us a higher low. So this trade here, if we zoom into the 1 hour, I think you can see it quite clearly on that. So that was, this part here. It's not quite as nice. We had a better setup on the GBP. But it was a very similar sort of thing. But the price, where are we? Price moved up to here, down, then up, and made a lower high. So this one is it's not super fantastic because the high is not super low. Like obviously down, how do I grab that? There we go. This low is much lower. This low is only a little bit lower, which, yeah, it's not great. It's almost just a double top. But then the price comes down to this point. Actually, when the price does come down to that point, it then gives us a very clear lower high, which is this point here. So from here to here, it's clearly lower, which means the buyers are really not buying at this point anymore. Price came down and the buyers pushed it straight up to here. Then the sellers came in aggressively, and then the buyers gave us a very weak push up. So that tells me that the price is very likely to drop. And on the daily, we can see that the price was moving down to this sort of zone, and we're talking about being up here. So the price on this trade, we could have our stop loss here. I'll just make that a different color. Stop loss there. Entry at this support line here, so the price comes back down again, telling us yes, we're off, and we can target the bottom, which is down here somewhere. So on that, actually, I think I've got a way of where are we? Indicators. A way of easily measuring our risk to reward. There we go. So if I chuck that on, we can easily see our risk to reward. Takes a second to come in. There we go. So it's a sell at that point, and if we unlock it, and then our risk was stop loss that big, and then our profit down here somewhere. So that's a 2.85 return on risk. So we'll put that there. We can see about there. Yeah, or 2.82 or something like that. Yeah, something like that. But as you can see, it's much better than a one-to-one, and we're hopping in at a time where the buyers are giving up. So not only are the sellers picking up momentum, the buyers are losing momentum. They're showing us that they're weak, and on the big picture analysis, it's in the middle of, well, at this point, it's still a confirmed downtrend because we haven't got any higher lows, and we're looking to exit the trade before we hit this support, support and resistance. So we're not looking just to let it run because it's showing us a strong support line. We need to get out to keep ourselves safe if the market is telling us that that's a danger zone. So within the resistance, within this consolidation, the sideways movement, there can be some really nice trades to take, like this one. So yeah, so that's how you'd take a trade in between a wiggle. Like I've started by saying the weekly charts, it's just showing us a lot of wiggle action, some mess. Within that, you can choose to trade, oops, we've got some loading, from say like the high back down to the low, if it's showing that that's likely to happen. So for example, here the price was here, came up to this point and then down. That's telling me that the buyers are stronger at the moment. So I wouldn't be looking for a sell trade because the sellers are showing weakness. So when the price comes up to this point, if it breaks through and comes back down to the other side, and then on a smaller time frame starts showing us it's losing momentum and starts going sideways and starts to point up, well, that tells me that it's the smaller time frame is curling up and the bigger time frame is showing us a tick trade. So it's yeah, that's just how I keep looking for confluence between the time frames. So yeah, and yeah, I hope some of that made sense and yeah, has some sort of help for you. Let me know if you've got any questions about that, because I would like to explain the way I trade as clearly as possible. So if this whole video is not that clear, yeah, let me know and I will try and make it better. Don't know if I can, can't promise anything, but yeah, I'll try. Excellent, happy trading, and have a lovely day.